is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. In this video, I'm going to analyze Starbucks Corporation with stock symbol SBUX. Some of my personal reasons of analyzing Starbucks are: first, I found the stock in Daddy Beluga's portfolio, my husband's portfolio. We were kind of intrigued by this company during our trip to Medan at the end of 2019. Okay, the good old days there where we can just hop on a plane and went to Medan for weekend. Okay, we saw that the Starbucks stores, was actually pretty common in Medan, if not more than McDonald's. Okay, briefly looking at the company's performance, then my husband decided to put some small position in it. So in this video, I'm retracing his reasoning then and judge whether his judgment is still relevant today. After working on the numbers and company profile, my quick take for Starbucks: first, it's a growing company. 2, it has a decent dividend yield but not spectacular. 3, I don't have any plan to make position on Starbucks yet. Okay, follow my video as I quickly discuss the company's profile, EPS since 2005, dividend and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspective and learn more. Okay, before getting into the data, I read out the disclaimer first. Disclaimer: this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. Over time, you may find some inconsistencies in my analysis and conclusions. Please bear with me. My analysis is limited to the public data that I can obtain, as well as the scope of my knowledge. Both of those items changing over time. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision, but if you do your research, I hope this video could be useful somehow. Okay, now let's start from a brief company's profile. Okay, Starbucks Corporation is an American multinational chain of coffee houses and roastery reserves. It was founded by the three friends here that we have on the screen. The first one is Jerry Baldwin, Zeph Ziegel, and Gordon Bowker. I hope I pronounced the name correctly. Okay, it was founded in 1971. It's said that they met each other as students at the University of San Francisco. Starbucks headquarters is in Seattle, Washington, United States. The company has changed so much from what it was founded to today. In the beginning, it was started as a single store at 2000 Western Avenue in Seattle. Their early business didn't sell coffee drinks like today, but they just sold the beans. Okay, the coffee drink business started in 1987. Okay, in that period, the original three founders sold their business to their former manager, Howard Schultz. Schultz that starting the coffee drink line and exponentially grown the company. And today, Starbucks can be found almost everywhere in the world. There are at least 3 Starbucks within 15 minutes of walking distance from my house. Okay, can you imagine that? In this small city. Okay, as of this video, Starbucks top 10 holders are filled by institutional investor, where it is led by the Vanguard Group Inc. Yep. I will not discuss any further as the Wikipedia has already so much information about Starbucks. Okay, now let's go to the gist of the video, which is their performance. Okay, so here I plotted Starbucks earning per share for the last 15 years since 2005. So I also added a horizontal green dash line as a guide to zero level. Earning below this line indicates that the company is recording a loss for that particular year. Let's look at the screen. Yeah, let's look at the graph here. At a glance, the general trend for Starbucks seems to me is a growing company. However, there are several dips that I think we need to pay attention to. Okay, those dips are in 2008, 2013, and lastly 2020. But there was a decrease in earnings since 2019 before the deep dip in 2020. In their 2008 annual report, Starbucks management acknowledged that they were just completed a very difficult year. It was their first year with slow growth, store closure, and some drastic steps for cost reduction. As I recall, 2008 also the year of US subprime mortgage bubble. This seems to realization has prompted Starbucks management to round out about 10,000 of their partners in New Orleans for leadership conference and new direction for the company. Since then, Starbucks had placed more emphasis on coffee and the Starbucks experience. The turnaround plan seems to work as the company earnings grow for the next 4 years until it dipped again in 2013. That year was rather strange as Starbucks reported record performance. Net revenue was increased 12% from the year before. However, the net earnings took a deep dive. The clue came from a rather obscure footnote. In 2013, Starbucks incurred about $2.7 billion pre-tax charge from the arbitration with Kraft Food Global Inc. The arbitration case might be beyond my current knowledge and expertise, so I'll just try to summarize based on my limited understanding. So the case seems to be stemmed from Starbucks' desire to terminate its agreement with Kraft. The agreement was that Kraft will help to distribute Starbucks coffee other than Starbucks Cafe. In this termination, both sides claim to be the victim and demand compensation for the loss. The end result, the arbitration court decided that Kraft was the victim, and as punishment, Starbucks had to pay for the amount was then the $2.7 billion was an estimate during the reporting, and it was already recorded as expense in 2013. Starbucks recovered very well since 2013 until another decline again in 2019. There were several factors attributed to the 2019 earnings drop. The first one is some expense from the East China joint venture, no more contribution from Tazo and Starbucks Thailand, as those business units have been sold. If I remember correctly, the ThaiBev took over Thailand Starbucks operation. And then finally, the great dip in 2020, mostly contributed to the COVID-19 pandemic. Okay, so that's a bit of the company's performance through a glimpse through its EPS and the drops throughout the years. Now let's take a look at what are the perks for the shareholder. That is the dividend. Okay, to see the sensibility of dividend payout, so here I plotted 3 layers of information as usual. The first one is the dividend payout over the last 10 years, which I plotted as red-brown markers connected by a thick red line, as we can see on the screen. On each of the points, I've annotated with 2 numbers. The numbers above, the markers, are the dividend payout in US dollars, and the ones below are the payout ratios to the respective year's earnings per share, or EPS. As a comparison to the earnings, here I plotted back the EPS or earnings per share as a thinner line with the same color, red. Over the last 10 years, Starbucks dividend have been steadily increasing. In most, it has a very healthy proportion with respect to Starbucks earnings per share. Visually, we can see that there are rather wide gaps between the dividend level and their earnings. In the normal years, Starbucks dividend between 14 to 50% of their earnings. 2 special dividend payouts happened in 2013 and 2020. On those years, Starbucks distributed dividend higher than their earnings. The payout ratios are 4,000-ish and 200%-ish for 2013 and 2020 respectively. Those sources of cash could come from the retained cash from previous years, so they are not that bad. So far, I think Starbucks dividend policy is quite healthy. Okay, Now, next, let's look at the dividend in comparison to their price. That is the dividend yield. Okay, so here I plotted the average dividend yield per year as the round markers. At each markers, I place an error bar, which represents the range of yield over that year. The variation in a year is caused by the volatility level of the share price. The yield increase if the share price decrease and vice versa. We can see that there is a pretty wide dividend yield spread, especially in volatile market between 2018 and 2020. 2018 and 2020. Depends on the market timing. The dividend yield could reach 3%, almost 3%, yeah, which is much better than bank deposit in Singapore. The last dividend yield is about 1.21%, a respectable yield as compared to bank deposit in Singapore, which for October 2021, which is this month when this video is prepared, are around 0.4 to 0.8%, just below 1%. Okay, so that's about how hard your investment works in Starbucks. Now let's take a look at how the market valued Starbucks. Okay, to see market's valuation of Starbucks, here I plotted 4 layers of information. They are: first, the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term, Starbucks share price, and it will pop me with a graph similar to the one that we have on the screen. But price alone, as we all know, sometimes misleading for the value of the company and its prospect. So I'll include some fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earning, that's the PE ratio, is 10. For me, I consider 10 times earning multiply has 2 purposes. The first one is that it indicates the price where I expect I can have a higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is 5 years. Second, as a consequence for the first reason, I'll consider share price above this 10 earning multiply to be expensive. Usually, I consider to be expensive. Okay. The third layer of information is the 15 times earning multiply. With same principle as the 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crossed this line. Okay. Especially for non-growth company, I consider to cut down my position if this happens. Okay, so now let's see what's going on with Starbucks share price. Let's look at the screen. Let's look at the graph that we have on the screen. So from the company's performance, we already established that Starbucks is a growth company. Then from the market perspective, the market seems to evaluate as such the price trending higher than 20 earnings multiply. Faced with earning drop in 2020, the market seems to be pretty forgiving. There's an expectation, there's an expectation of economic recovery that drive the share price higher. This seems to be supported what it seems to be an earning recovery in 2021 so far. So here I added now the annotation of Mami Beluga's version of reasonable price based on Starbucks' latest earning report, that is Q3 2021. Okay, do note that Starbucks' financial year ends in September. Okay, now let's look at the screen. Considering the Starbucks as a growth company, my normal framework of following 10 times earning multiply may not work that way well, even though I'm still using it as a guide here. So while based on my normal framework, I have my reasonable price at $20 to $30 per share. In this case, I consider for Starbucks, yeah, looking at the company as a growth company and also the trend, yeah, I consider even $60 to $80 to be still a reasonable price. The $60 is also based on the historical market valuation that has always been above 20 times earning multiply, as we can see on the screen. 2020 and 2021 is a special period, like 2 special years, where the earnings drop, but the market still has a high confidence. One thing that I note, if the company changed people's lifestyle, especially where and how they hang out, this may affect Starbucks earnings. But so far we have been seeing Starbucks quickly adopting the change. In every country that our family have visited, we can see Starbucks local version, and they are quite accepted by the local lifestyle, just like McDonald's. Yeah, so considering that situation, I'm not that worried of Starbucks agility and possibility to adapt to the change in people's lifestyle. Okay, with the current price at around 111.22 US dollar per share as of 8th of October 2021, when this video was prepared, I can see that the market seems to put a very high trust on Starbucks. However, I'm not that confident. I'm still looking at the price around $60 to $80 per share, US dollars per share. Yeah. Okay, now wrap up. In conclusion, Starbucks is a growing company. It has a decent dividend yield, but not that spectacular, as we have already seen. It's better than bank deposit in Singapore, but not that high. Some other stocks can give us even higher dividend yield. So also considering the price, I don't have any plan to make position on Starbucks yet, and I don't want to encourage my husband to get more position in Starbucks too. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you, and it means a lot for a beginning YouTuber like me. Okay, that's all for today. Thank you. Bye.